We go by Wacif, and thank you guys for joining. I think Cynthia Bernard has won the award of being the participant from the farthest distance. She's coming from Los Angeles. Welcome, Cynthia, and it's morning where you are, so thank you for joining. I am going to be part of the group presenting. The primary presenter is about to join now, Sean Mitchell, my colleague. We both are relationship managers with Wacif, which means we reach out to small business owners and technically assist them, help them prepare for the lending process, or prepare them to access capital to grow or maintain their small business or business. We're excited about the opportunity to talk with you this morning. We pulled together some general information about Wacif, but also some real specific information that we encounter all the time, some kind of do's and don'ts about how to deal with a lender or how to deal with a financial institution. So once Sean is ready, we're going to go ahead and get started.
Hello, Eric, can you hear me?
I can hear you.
Kennedy, could you cut my video back on? Thank you, Kennedy. Okay, thank you everyone for joining this call today. This is about access to capital the Wacif way. And we're going to do just not so in-depth, but just an overview of how you access capital, or in other words, what I like to say, how the game is played. Okay, and that you'll kind of find more about that as we get into the call. Wacif has been around, as you can see, since 1987. We have been in the Washington, D.C. area traditionally, but recently we have expanded to Montgomery County, as well as Prince George's County, and some parts of Virginia as well. And we'll go further into detail in regards to our basic transaction area. Next slide. Of course, again, my name is Sean Mitchell. This is my contact information. You can reach me at smitchell@wacif.org, 202-964-6026. Next slide. And this is my partner, Eric Alston. Eric, the gentleman who was just on, he heads up the Virginia market. That's a new market for us. And Eric can be reached at 202-504-5877. Or his email at the bottom, ealston@wacif.org. Next slide. Okay, basically, when we talk about our mission, what is our mission? Okay, first of all, I like to start with what are CDFIs? CDFIs were enacted back in 1994 under the Clinton administration because what government found out was that although we do have governance, what we thought to be governance at that time back in 1994 around the housing market and how we lend on that market, what about the commercial market? Do we have any governance there? And so they created CDFIs and back in 1994, and that is to provide capital to the underserved communities or those individuals who could not otherwise obtain capital through normal bank lending. Oftentimes, people who have been socially ostracized always wonder, why can't I get capital? Why can't I get capital? So this is the government's response. CDFIs, financial institutions that actually will lend to those particular groups. So we have the social capital that's involved here. You ask yourself, okay, what is the social capital? The social capital is basically a set of shared values or resources that allows individuals to work together in a group to effectively achieve a common purpose, and that's to provide capital to the underserved community. My favorite part is the knowledge capital piece, along the lines of, teach a man to fish, and he'll feed himself forever. A man or woman to fish, and they'll feed themselves forever. Teach you essentially how the game is played. That's the knowledge capital piece. And then, of course, there's the financial capital. Wacif has the funds to lend to your small business. And we're not as stringent as some of our competitors, like some of the larger top brand banks or even community banks. We tailor loans that actually meet the needs of your particular business. That's why we always emphasize access to capital the Wacif way. Next slide. Okay, we have three strategic pillars. Inclusive entrepreneurship, community wealth building, okay, and equitable economic development. Inclusive entrepreneurship, community wealth building, and equitable economic development. Next slide. These are some of the partners that we partner with. You'll see a lot of names that you recognize, like Aussie, PNC, Bank of America, Careforce, Citi, the DC Main Streets. The list goes on and on. Everyone is involved, and including JP Morgan Chase, everyone is involved and engaged in trying to provide capital to small businesses. Because quite frankly, most people have grown to accept that small businesses are the backbone that makes this thing work. You hire the most people, particularly people of color, and you also employ the most, employees in the DC market alone. So we have a lot of partners. Next slide. We've had impact of up to 22,000 in full and part-time jobs, and based on what we do here at Wacif, the hours of counseling, 6.9 thousand. 75% of the lending or the dollars that we have sent out have been to women or minority-owned business. 75%. That's a huge number of the money that we have pushed out have been to women or minority-owned businesses, and 45,000 for flexible financing. Flexible financing essentially gets to the point of, are we going to really hit it to you because of the credit score? Not necessarily. Wacif, we do not have a minimum credit score. And this is getting back to lending the Wacif way. We do not have a minimum credit score. I know that's hard to believe, but we do not. And I'll give you some examples of how that works later on in the presentation. Next slide. And this, I'll pass it over to my partner, Eric Austin. Eric?
All right, yeah, I'm going to build on our description of Wacif. We have some signature initiatives. One of them is what we describe as the Enterprising Women of Color, also abbreviated to EWOC. And it's an initiative where we know that most of the small businesses started in our country are started by women of color, and we're building on that. And so we've created a community where they can interact, where they can knowledge share, and where we can deliver information to them. So if you're interested in attending a fun meeting and where you're going to learn a lot and you're going to meet some dynamic people, you should sign up for one of the EWOC events. I mean, super group. We also own the Anacostia Arts Center. That's in the center, and right below it is the Hive, which is a home for innovators. It's really an opportunity. It's a place where small businesses can pay and have an address or a DC address and have a station within the Anacostia Arts Center to meet with other entrepreneurs or even to meet with customers. But the Anacostia Arts Center is right at Martin Luther King and what's now Marion Barry Avenue, I think, or Boulevard. I'm not sure if it's Avenue or Boulevard, but right there, kind of the heart of Anacostia. We're proud to own it. We have plans to redevelop it. And then finally, we do what's called an accelerator. And it's a cohort of small business owners that get to go through a short curriculum of business topics to improve their businesses. And we've been very successful. We just graduated one. We're about to launch another. So Ascend is one of our signature initiatives. Really proud of that. And then I'm going to see what's next. I'm not sure what I'm supposed to talk about next. Let's see. Okay. Now we talked about Wacif. We're going to talk now about, let's see. some of the reasons lenders expect a business to come to them for money or for funding. It's to purchase equipment or real estate. That makes sense. Sustained or seasonal sales growth. You might have a cyclical sales cycle where sometimes it's down, or in certain months it's down, and then certain months, certain seasons, it's up. Slowdown in accounts receivable collection. Let's just be, that sometimes that happens. You can't get you can't get payment on some of the things you delivered promptly enough. That happens all the time. Slowdown in inventory churns. That really means a lot of times things aren't selling. It could be a service, it could be a product, but we understand that. One-time expense or investment. Maybe you want to buy a new truck, you want to buy a new freezer. Reduction in trade credit available. So maybe you've had the amount of credit that has typically been available reduced, and so you need some way to access additional cash. And then withdrawal of cash from the business by an owner or a family member. Somebody's cashing out, and you need that reserve to keep operating your business successfully. Let me see. So now I'm going to get into a little bit of the technical assistance we offer, and I want to present this because it's important that small business owners, we talk to small business owners all the time, and it's surprising how few know their exact credit score or have looked at their credit report. I know Sean mentioned earlier that we don't have a minimum credit score, and we don't. But what we do require is that the business owner or the person who's applying for the loan be maintaining and servicing their debt. So even though we don't have a minimum credit score, because we know entrepreneurs bootstrap. I was an entrepreneur for years, ran a small business, and look, a little bit of borrowing from Peter to pay Paul, and you're taking funds anywhere you can get them to kind of keep your business alive and going. And oftentimes the credit score gets hit. So we understand that. We've delivered funding to people with credit scores that are well below 600, and we continue to work with business owners. But we do encourage you to be ready for an honest discussion of your credit when you approach a lender. When you want to access capital, they're going to be able to see it. That we're going to find out anyway. So be open about it, and ideally you can go to annual credit report and access your credit report and see what's out there before you have that discussion. This is some additional information. We'll share this presentation with you, and it talks about why we have annualcreditreport.com or annualcreditreport.com and why we use them. I want Sean to talk a little bit about kind of the history of this. He's got a long history in commercial lending, and he's dealt with all types of business owners. So Sean, do you mind just sharing a little bit about your experience and how the Fair Credit Reporting Act came about?
Absolutely. The Fair Credit Reporting Act, basically that's a federal law put in place to make sure that you know what your credit is. You should not be paying for your credit report, okay? You should not have to deal with people trying to sell you things because you want to know what your credit report. I mean, it's nice and it's great to engage people that way, and I think it's a great exercise, but back in '08, when we had the first housing debacle under the Obama administration, they created the Consumer Financial Protection Bureau, CFPB. Annualcreditreport.com is the only recommendation they give on their website. Annualcreditreport.com doesn't try to sell you anything, and they simply do what the Fair Credit Reporting Act mandates that lenders must do, and that is let you know what your credit is. There's really no excuse for being in business and not having some kind of idea as to where you stand from a credit perspective, okay? Because that's one of the first questions that a lender is going to ask you. Do you have an idea where your credit is at? And you might come back and say, well, I don't have a clue. I don't know. I don't know. Well, that's the wrong answer. You're in the business of trying to procure capital, trying to have access to capital. And that's the first step. And I know sometimes it can be a little bit scary or a little bit unsettling, but the best way is to get in front of it. The best way is just to get in front of it. Thank you for that, Eric.
Yeah,
And I put that link into the chat as well. And then I'll
that's
talk a
awesome.
little bit about some of the loan products we offer as well too.
Yeah, thanks, Sean.
Um, Thank you, Eric. The loan products, we do term loans. They go up to 72 months, okay, which is a fairly long time, okay. Interest rates starting as low as 7.75%, which is very good. Again, you saw some of our partners that we listed in the earlier slides. They make it possible for you to have lower rates by compensating or perhaps shrinking those margins or those spreads that are attached to most loans. There's a $150 non-refundable application fee. Okay. There's 3% commitment fee and servicing fee due at closing. No prepayment penalties, okay, on debt. No minimum credit score. That's all right. I said it. No minimum credit score. But that does come with triage, what Wacif refers to as triage, which is essentially going in, finding out, well, what happened and why is your credit this way? Well, I was a victim of identity theft. Okay, I get that. Oh, I was going through a divorce. I get that. Like Eric said, hey, things are slow. I've maxed out all of my cards. I'm in arrangements with my creditors, but I am paying. Okay, we get that too. Not a lot of financial institutions, not a lot of financial institutions are trying to hear that. As I'm sure you're probably aware. At Wacif, we want to hear it. We want to provide technical assistance. We want to find a way to lend to you and provide access to capital the Wacif way. Okay, personal loan guarantee by all key owners. That's going to be anywhere you go. Everybody's going to want a personal loan guarantee. So the myth about I just started this LLC down at DCRA, and yeah, it's going to be on them. I paid my dues. No. If you're a publicly traded company under the Securities and Exchange Commission doing over $250 million a year, yeah, maybe, but you're not. If you're probably on this call, so your credit is about 95, 99% importance, and that's why I always cover annualcreditreport.com and knowing where your credit is because it's so critical for small businesses within this space. It's essential. Equipment loans. We do trucks. We do inventory, working capital. Just trying to make it through a cyclical time period. Maybe you're a Rita's ice cream franchise, and guess what? No one wants ice cream or frozen ice today when it's already frozen ice outside. So guess what? You need a bridge loan to bring you through these slow months. Okay, the terms. For the loan terms up to 12 months, interest rates starting at 11.19. These are on our lines of credit. Okay. Now let's talk about those lines of credit for a second. You have evergreen line of credits and you have revolving lines of credit. To be very clear, this is a revolving line of credit. I'm going to say that again. This is a revolving line of credit. Real quick, I had a client at one point in time, I gave him a $250,000 line of credit. Did it for him in fourth quarter, Christmas time. Very happy Christmas present for the gentleman, an evergreen line of credit. Well, guess what? There was an auction. Goes out and buys a house. Okay, with that evergreen line of credit. Wrong answer. Why? Because when you receive an evergreen line of credit, unlike the line of credits we offer here at Wacif, you have to clean that line of credit up one time within 30 days within a calendar year. He was not able to do that because he used it to buy a house. So we accelerated the note and made him pay back the money in a year. Okay, that not too comfortable, right? And a good way to mess up your credit. So those are some of the pitfalls you can experience there. With the revolver line of credit, the type of line of credit that Wacif offers, it's a line of credit designed to protect you. Oh, and real quick, put your questions in Q&A. Put your questions in Q&A. Okay. With the revolver line of credit, the type of line of credit that Wacif offers, you basically invoice us and we advance on that line of credit. Okay. Those funds go into a demand deposit account or a DDA or a checking account. And then when the money is deposited into the account, we sweep in and we take those monies back to pay down our line of credit. Okay. That type of line of credit should not, in theory, get you in trouble if you're using it the way it was designed to use. So that's a very good line of credit. Now, there is a 3% commitment fee on that. There's no prepayment penalty on those lines. There's no minimum credit score. Again, collateral requirements means you got to have some debt or some accounts receivable aging or AR aging report, meaning you have to have governmental agencies or maybe businesses if you're in a B2B sales that owe you money on a 30, 60, and 90-day period. Anything above that, obviously, we don't count because that's considered bad debt. But 30, 60, and 90, that is our asset. That is our collateral. That is what we're lending on, and then we're going to talk about that too. When we talk about collateral, I always feel it's necessary to talk about the three C's of credit. Okay. Cash flow, credit, and collateral. Cash flow, credit, and collateral. If we expand that, we're talking about the collateral, the conditions, the character of the person applying for the credit or the individuals involved, their capacity to repay that debt, and the capital that's involved. So collateral, conditions, character, capital, and capacity. Okay. And then if you want to just keep it short, you could say cash flow, credit, and collateral. Those are essentially the playing blocks of lending when you're looking at things from a commercial perspective. So that's cash flow, credit, and collateral. Okay. Cash flow, credit, and collateral. And then I'm going to put that in the chat too. And for the 5 C's of credit, it's going to be collateral, conditions, character, capacity, and capital. Okay. And I'll move on to the next slide.
All right. Hang on. There we go. All right. This is something actually. I don't have a commercial lending background. I owned a business for years, and I've worked at a couple of really large banks, and so I know the banking space, and I know the small business space, and this information was helpful to me as a small business owner, and hopefully it's helpful to you. Things that tell lenders you're not prepared, right? And one of the things we deal with often is commingling, and it goes to a little bit of the, borrowing from Peter to pay Paul, or dipping into personal assets, and that can happen. Okay, you can have a commercial bank account and a personal bank account, and at times maybe you have to move money from one to the other. The challenge is when you're not tracking it, when you're not documenting it, and when we go back to try and prepare or look at your cash flows to determine your worthiness of a loan, it's really difficult, and it makes it it can make it impossible to lend to people at times. And then the other one is, I'm going to save some money on my taxes, so I'm not going to show profits for the business. Now, look, saving money on taxes is a good thing, as Sean and I have had this discussion. It can be a great thing. I'll tell you when it's not a good thing, right? When you're thinking about accessing capital, right? Because one of the things we look at is free cash flow. We want to see that you're going to have enough free cash flow to pay us back. So if you have a business and it's in an early enough stage, that's the time to pay your taxes, right? Because the tax bill is going to be at a minimum until it grows to a certain point. So maybe you start out paying your taxes, getting set up so that you can access capital or submit for a loan, and show a profit is the advice. The other one is owners not expecting to personally back the loan. Sorry, Sean mentioned that. Yeah, we require that any owner with more than a 20% stake in the business, we ask for we do a credit check on them, and they're going to be required to personally back the loan, and that's true for every commercial lender you're going to come across until you get to that publicly traded stage or a really established business. Owners not familiar with personal credit reports. We hit that already. And then finally, I wanted to add this: owners not showing proof of concept. And look, the idea is for us to lend you some money so that you can either pay off some debt or make more money. And the proof of concept comes in. Show us how you can turn a $5 investment into a $50 gain. So it's just the how does your business work? What's generating money for the business, and even if it's a marketing campaign, how you can spend $1,000 on marketing and get $5,000 worth of business through doing that. So this proof of concept is really important because it helps the lender understand how your business turns over, how the financials in your business turn over, and it gives them a better way of evaluating you. So let's go and see what's next. Sean's going to talk to us about this is our territory, and this leads to some other things. So I'm going to let Sean. Are you ready to
Yes,
talk about this?
yes, I am.
All right.
Okay. This right here basically shows our BTA, our basic transaction area, or the geographical areas that we are authorized to fund loans in. Okay. Essentially, your business needs to operate in the District of Columbia. Okay. And within Maryland, it's going to be, and these are hard stops, people. I repeat, these are hard stops. Montgomery County or Prince George's County for right now. We are trying to expand that, but for right now in Maryland, this is our first year. We're going into our 12th month of lending in Maryland. Okay, so right now we're only in Montgomery County and Prince George's County for the state of Maryland. Now we're in all of DC. When we talk about Virginia, we're only going to talk about Virginia and the immediate surrounding areas, which we see are Alexandria, Arlington County, Fairfax County, and the city of Fairfax. Alexandria, Arlington County, Fairfax County, and the city of Fairfax. These right now are all hard stops. I know I've tried. If they're not, the business is not operating in any of these geographical locations that you see on your screen right now, unfortunately, Wacif at this time will not be able to help you. However, I do have other partners that are national partners and national organizations that I've posted in the chat that do go outside of the basic transaction area, which Wacif is committed to. And I will always try to provide another resource to get you to where you want to be. Okay. The owner must be a U.S. citizen or a legal permanent resident or have a valid work visa. I've done panel discussions and I've had people approach me and they're just using EIN numbers and they don't have a social security number. LEDC, which is in the chat, they can work with you. Okay. That gets back to if you come to a lender or you come to someone in our position that is here to help, we should be able to refer you to someone who can help. Okay. Because it's all about relationships and that's how you build relationships. Must have file federal income taxes with the IRS, meaning, you have to file your taxes, folks, or at least have an extension to receive funding from us. Okay. Must have a business bank account. You got to have a business bank account. And that makes me think about something else. A lot of times we have small businesses and things of that nature. We commingle. Sometimes it goes to personal. Sometimes it goes to this account, that account, because we're robbing Peter to pay Paul to try to get ahead, to try to make this thing work. Well, when you apply for funding at Wacif, the way we analyze your debt service coverage ratios is we look at the monies that go into your business account and the monies that go out, and we looked at what is left over. Now, if you have another 20% of your money going over here to the left or to the right, rather, excuse me, we're not going to know about it unless you tell us. We're not the IRS. You can provide all of those statements to us, okay? Just to make sure you get, credit for the monies that your business receives. And we get it. We understand. We're in the business of understanding, thus the notion, access to capital the Wacif way. Must have been in business for a minimum of 1 year. Been in business for 1 year. Must have had business revenues at or above 50,000 during the previous fiscal year. So just 50,000. I mean, those are some pretty low thresholds, a lot lower than any of our competition. But granted, we will still work with you. We cannot be a nonprofit organization. Okay, we're only going to lend to for-profit entities. We cannot lend to nonprofits. Cannot be a business within a specific list of restricted industries. Obviously gambling, drugs, the whole cannabis piece. We're not on board with that. Not to say we're not on board. We just our funders are not allowing us to lend in that space. So just things of that nature we can't lend to. And again, that's Montgomery County, Prince George's County, and Virginia. That's Alexandria, Arlington County, Fairfax County, City of Fairfax, and the District of Columbia. Next slide.
All right, so this is our look. We don't. Let's just be honest. Wacif doesn't exist without partnerships. We're not like we don't have a big treasure chest of earnings and money to rely on. We're a relatively small organization in the big scheme of things, but we have a really important mission, and it's serving small business owners in underserved communities. We're committed to it, but what allows us to do it and maintain some level of success is that we partner well. And one of the reasons we're able to partner is because we, as Sean has already demonstrated by the showing some other CDFIs that we work with, we refer business all the time, and we accept referrals all the time. So we encourage you, if you go to a lender or you've been to a lender and they have maybe declined you, or you just having a conversation with them and you know that they want the opportunity to pass on some of those rejected loans. That's part of what has driven Sean into this space, right? Got tired of seeing good businesses that couldn't get funding, and he wanted to help. And we know that there are other financial institutions out there. We partner well. We developed a web page where lenders can get credit for their referral, and credit being acknowledgement. So it's a way of tracking who refers, and we built this website so that they can submit a referral, and honestly, small business owners can get served, and the person who refers them can be given the credit. This is just an example of how Wacif partners, and you saw the page of partnerships that we have. We're proud of that, and we work hard to be a good partner and to play fairly and to do what's right. And we have no hesitation of encouraging you to take a loan from another financial institution if the deal is better. We would not hesitate to encourage you to do that. We want your business to be in business, and we want you to grow. That's our presentation. I'm gonna hand it to Sean. Sean, any last words? His QR code is at the top left. You can schedule an appointment with him. All of his contact information is at the bottom, as well as Wacif's information. So I'm gonna let Sean have the last word.
Thank you very much, Eric. This what we do is about trying to slow down to speed up, essentially. A lot of times when I was working in commercial lending proper, we didn't really have time to slow down. And but one of the things I would do is I would refer business to Wacif because I was aware of Wacif. One of my mentors at the time, who was then president of the board here, opened up and showed me that there was a way to help people. So, Wacif is going to provide you technical assistance that's going to get you over the hump. Wacif is a safe environment to ask the questions that you don't feel comfortable asking when you're sitting at someone's desk inside of a bank and you're a little bit ashamed that you don't know. Wacif is where you go to prepare for that meeting. Wacif is where you come where you get a nice soft referral or warm referrals, what we call it in the industry, where we introduce you to a banker like I did last week for a client. Okay. I'll tell you a little bit of story about that. I had a client last week, was initially not approved for various different reasons. Won't go into the details, but I was able to go in, restructure the loan, find out where there were the disconnects, and now that person is approved for a $70,000 term loan. Okay, very happy individual. So that's lend access to capital the Wacif way in a nutshell. Um, are there any questions? Or Kennedy, do we have any questions in the Q&A?
Yes, we have quite a few questions.
Let's dive in.
All right. So the first one we have from Shannon Johnson, we have, how do we go about applying for a line of credit?
Well, I'll dive right in. When you're applying for a line of credit at Wacif, you want to meet with either Eric or myself so that we can qualify you as someone that we can lend to. Okay. There's no sense in sending you down a path where you're going to be disconnected. One of the good things I love about Wacif is we want to get you loan ready. That means we're going to have a conversation and I'm going to find out, have you generated at least $50,000 in revenue yet? Have you been in business for at least 1 year? Okay. And also, what's your credit score? And if it's below 600, what's your story? I mean, how many times has anybody asked you that? And as long as I'm okay with your story and I'm okay with how the time you've been in business and the revenues that your business has generated, then I will directly refer you to a lender, but you'll click on a link and you'll fill out an application. We try to be as automated as possible so we can service as many consumers or borrowers, excuse me, as possible. And once we send you that link, a loan officer will be in contact with you, and the clock starts ticking only after you have completed and provided all of the information that the systems have asked you for. That's the only way we can do a proper underwrite. Okay. How long does the process take? I've seen it done in 2 weeks. It really depends on you. That the ball's in your court there. Wacif can move as fast as we need to. Next question. I hope that answered your question.
If someone is looking to purchase an existing business and needs funds to make that purchase, can Wacif assist?
Eric, do you want to answer or you want me to answer?
I can answer that. I just had
Okay.
a situation where we do accept there's an approved list of franchises that the SBA publishes, and I was asking in regards to a franchise. I had a TA call where he wanted to buy like a Minuteman press, and we follow the SBA guidelines as far as what franchises that we're willing to finance or pay for, and then other businesses. I'm thinking it depends on the cash flow and the deal. I don't know outside of a franchise if we do though. Sean, any?
Well, the way I understand it is that obviously that business would have to meet our guidelines, 50,000 in minimum in revenue, 1 year in business. And then it's going to just get down to the 5 C's of credit. I mean, what is your background in the industry? Do you understand what you're getting into? I know one of the things we had a problem with when Five Guys first came to market at BFA was everybody who didn't know how to flip burgers wanted a Five Guys. Well, the answer was no. you know, you're going to have to get a partner who understands how a restaurant works because there's a big difference in the cases that I'm thinking about, from being a lawyer and trying to flip a burger and make a profit. Okay. Bank just wasn't comfortable. They wanted people who had experience. So I would think that you'd want to have some experience in the space, or maybe have a business that is similar to the one that you're trying to purchase, with revenues that are over $50,000 and at least 1 year in business or more. And that's probably going to look like a term loan up to $250,000 for the purposes of acquisition. Okay.
And we also want to be sure that you have some skin in the game as well. It can't be the loan is the only source of funding for the acquisition. We want to know that you have some money that you're contributing to that deal as well.
Next question.
All right. What if your business is closed due to no funding to stay open? I guess they're asking, can they still ask for funding even if their business is currently closed?
So, in other words, you have zero revenue. No, but we do have other referral partners that I've placed in the link. One of them is Hilltop Microfinance. Okay, a lot of startup lenders will go to Hilltop, and they're in DC. How about that? And they've done panel discussions with Wacif before, and I'm familiar with the staff. I typically refer people who are in the early stages to Hilltop or organizations that are like-minded in that space because they're more equipped to handle it. I'm not going to try to pretend that Wacif can even begin to finance that type of credit or request. Next question.
Would the spouse of a World Bank employee here on a G4 visa and with a work permit qualify to work with Wacif?
I just responded to that I'm not sure. I think so, but I'd like to have our HR be involved with that answer. So I requested that the individual email me so that I'm sure to follow up with our HR team and have them talk directly with them about it. But I don't, I guess, initially see it as a problem.
Okay, great. And I'm going to answer the last question. Someone was referring to submitting an application to the Anacostia Arts Center. And I dropped the link for anyone who's interested in signing up for a space at the Anacostia Arts Center / the Hive 2.0. And I'll drop that link again for anyone who's looking for a co-working space, who's looking for a virtual address, for any CBE certifications or anything like that. It's a great space and a really great environment of entrepreneurs located in Ward 7. So we'd love to have you join us there. And I believe those are all the questions we have, team.
Awesome, awesome. This was really great. Thank you, Kennedy, for moderating. This has been very informative. Let's see. We have something else in the chat. Okay. Oh, okay. There we go. Great. So thank you. I'm happy to talk to small businesses anytime, any day, any place. Love you guys. You make it all possible. And with that, if there are no further questions, any other questions in the chat or in Q&A, Kennedy?
No, sir.
Awesome, awesome.
Oh,
All
we
right.
just got one actually regarding loan options for a small business. Do you suggest a line of credit or a loan?
Good question. That really depends on what it is that you're doing. And you can respond back right now. What is the money for? Just respond back and I'll tell you. What is the money for? What are you trying to use it for? And I'll tell you which way to go.
I believe working capital.
Working capital. Okay. I'm gonna say it really depends. If say you need working capital to hire employees, you may want to get a loan. Okay. If you're using working capital to say buy widgets or laptop computers before you deliver them next week, I'm going to say a line of credit. Okay. If it's to do build out, I'm going to say a term loan. If it's to buy equipment, I'm going to say a term loan. If you just want to have it just in case, I'm going to say a line of credit. But the only caveat here is it's not an evergreen line of credit. So what does that mean? Well, you're going to have to wait till the business knocks on your door or until you go out and get it in order for us to disperse on that line of credit, meaning you're going to have to invoice Wacif or show us that invoice so that we can advance on that line of credit. So every situation is different. I had a CPA come to us and they wanted to get operating capital or line of credit on contracts that had not happened yet. We couldn't do that, but I do understand the concept. You're getting in bed with government, be it DC or be it the federal government, and you want to have a line of credit because someone said they take more than 30 days to pay, which we all know to be true. So you're going to need working capital to finance that. And of course, that debt is the asset that we lend on or the collateral. So yeah, I hope that answers your question.
All right. Thank
Thank
you
you.
everyone so much for joining, and we look forward to connecting with you all soon after this presentation.
Thank you.
Thank you.